dollar yen. I'm going to see now the screen goes up on your waiting for the screen. I just turned off, so I turn it back on. So I hope you get the dollar yen coming up. Okay. All right. As I said, this is the dollar yen for the week of March the 28th. If you look at the weekly chart, you would see that it is pretty much similar to the index, the dollar index. We closed the week at 92.48, right above our buying point, which we actually were trading it on Friday and on Wednesday before we had the electricity shut off. But right there above the 90, look at this, guys, for all of you who were taking these trades from last week, right above the 91.73, you had no choice. There is no reason for you to go to look at shorting this. And if you did nothing but buy it above 91.73, it closed at it put a high for the week of 92.95. You had about 100 points trade on that move, and this is a trade that we took, and I'm going to show it to you in a second. So that was our right there above, with a close of 92.48, then our bias is still to the long side. We're not even looking at a short. And the next move up, we're looking for a test of the 93.54. That is going to be the, and of course we're looking, this is about 125 pips from here, or 100 pips from here. So that is not a big journey. That's not a big, I mean, that is something that the dollar can do in a short span of time. So we need to find a way, we need to find entries to take the, so with this we have no reason to be short. We are only looking to be buyers of the dollar. And if we look at the daily chart, this is the move that I was telling you about. If all of you remember, if you go to the website and you'll see the price points from last week, these are our buying point. The first one was 90.88. The second one, as you see, the 91.73 right there, and that was the move. It took you all the way up to the 93. This here, that close is a very good close. It is not a negative close. It is just a profit taking towards the end of the week, and we should be looking for the prices to go higher. This close, even, to be honest with you guys, that close is actually a buy signal, because we had a sell signal when the market traded below 93.39, and now coming back 10 pips above that point, that is actually a buy signal for us, and we should have been taking it long on Friday if you're taking a position over the weekend. And your stop is very easy. If you go, you're long above 92.48, your stop is below 92.39, so you're risking 10 pips only on that trade. So we need to be buyers of the dollar. We don't have to sell it unless it trades below 92.30 and or 39, and this is now is going to be the beginning of our planning. And if you look at the intraday chart, you would see that this is the big move on the way up. And remember, I was telling you, this is the, I'm showing you, these are the trades that we took, so that you see that we actually follow the same rules. This is the live account setup trades. These are the same trades that we took. Look at here, 90.47, 90.71. You took those trades all the way up. These are the same trades that we were telling you to take. right there. This is the 91. That was the first buy, and right there, that is your second buy into the right above the 91.73. And so right here, looking at this now in making our trading plan, as I said, there is no reason for us to even consider going short the dollar yen. We want to be buyers of the dollar yen. So as I said, we will only go short below 92.39. So in this case, I'm just making it 92.30. And if we go short below that, then this is going to be we should have a quick capitulation to the downside. We should be looking for a quick decline. So therefore, we are going to use a tight stop, and our stop is going to be a little bit above the 92.40. So we are going to go short below 92.30, and we're going to place our stop above the 92.40. And since we had a close on the week of 92.48, we are going to buy either the break of the range to the upside. That will be a buy. We're not going to take any short signals, any sell signals coming out of Tokyo. We're not going to take unless the dollar trades below 92.30. We can take the buy signals, and we are going to enter our buy right above 92.95. So we're going to be buying above 92.95, and we are going to place our stop right below the 80 levels. You guys know the 80-20 rule. So we're going to place our stop right below. To be honest with you guys, I would rather much to give this long trade a little bit more room, because as you can see how powerful this move is. So we might get a little bit of volatility. So I would actually take it and put my stop below the market side. We need to give it some room to work. We don't want to get whipsawed, especially if Tokyo is thin. So we're going to place our stop below 92. Let's make it 60. Okay, so let's put the dollar yen. We are going to be buying. Our long point is going to be 92.95. Let's make it make it 93 so we don't get whipsawed. Our short point is going to be below 92.30. Our long stop, I'm going to put my stop below 92.60, and if I'm short, if I go short, I'm going to place my stop above 92.40, because the trend is to the upside, and the market is, if I'm going to take it short below the 9230, I'm going to use a very tight stop, because again, I don't want this market to turn around against me and to move higher, and I get hurt with being short and the market is moving against me. So if I'm going to take short, when you're going in with the market and we're near the high coming close, you have to widen your stop a little bit, so you allow it a little bit of a breathing room. But if you're taking a counter trend move, or you're taking a sell signal in an uptrend, then your exit should be tight, because you know you will find out immediately if you're wrong. So we're going to go short below 92.30 right there, and I'm going to put my stop over here. I don't want, if it gets above 92.50, this means okay, I am wrong and I'm turning around and I am buying quickly. All right, now our structural points are still the same. Now in this case, I'm going to use the structural points to the upside, I'm looking for the one closest to the market, so it's going to be the 93.54, the structural long to the upside. That will be the definite breakout that the dollar is rallying against the yen. So the structural long is 93.54, and my structural short is again the 91.73. If it comes below the 91.73, then basically it is bye-bye. So my structural short is the 91.73. So these are the trades for the dollar. The long point is 93. The short point, so we're going to go buy it at 93 or higher. The short point is 92.30. The structure long is 93.54. That means the trend change to the upside. The structure short is 91.73, and this is the long. If I go long, I'm placing my stop below 92.60, and if I go short, I'm placing my stop above 92.40. Okay.